Hello and welcome. I'm your host, Tshepo Modiba, and this is Buy Africa, where we focus on investment opportunities on the continent. This week, we're turning our attention back west, so West Africa, and taking a closer look at agro-processing and manufacturing in the region. And joining me for more analysis is Fungai Tarirah from Rudiarius Capital Management. Fungai, thank you for joining us. Interesting topics, agro-processing and manufacturing. Well, certainly not the first things I think about when I think about West Africa.
Intuitively, I think you quickly understand that there's a very large market in West Africa. Simply the population dynamics are the ones that tell us that there's a lot of people who live in West Africa, and by that definition, there's a lot of room for agro-processing or food processing in that part of the continent. The sad thing, however, is a lot of agricultural activity is still taking place at a subsistence level, so that you find a lot of that product doesn't actually get it to the stage where it needs a second or third round development.
And what are the factors that make it that way?
It's a wide range of things. So you'll find that elsewhere across the continent, where large-scale farming or indeed commercial farming has actually taken off, it's because access to title of land was actually easy, and that is very critical when it comes to being able to access finance and all those sorts of things. But also you find agricultural extension services in some of the West African countries are still quite hard to come by. So for people relying on rain fed irrigation, for people relying on natural methods of fertilizing the product that they actually have, yields are not going to be high enough. It's very hard for you to move from subsistence crops to cash crops, which is where the money actually is.
And are they economies that are doing slightly better than others?
So you look at places like the Ivory Coast. They're the world's largest producer of cocoa, which is the key ingredient for chocolate, producing something like 1.2 million tons on an annual basis. And they export pretty much all of it to earn the country about $3.4 billion worth of export proceeds. So it looks, I mean, from those numbers, you can see that clearly something is working, right? But I think quite often you find that a lot of farmers are not getting enough protection from disease. They're not getting enough protection from varying weather patterns, and they still rely on natural elements, as it were, for them to get on, instead of intervening at many of the stages along the way.
Now, for potential investors here, does that mean an opportunity, or are we still far away from that from a regulation perspective?
I always like to look at the lack of something as the exact opportunity for anyone who's willing to spend time and money and have patience to invest in that sort of a situation. So there is room for more commercial farming to come through as far as cocoa is concerned, for example. There is room for someone to supply on a more reliable basis and at a cheaper price inputs that these farmers actually need. And if you look at parts of India, one of the things they got right is that they actually had commodity exchanges, which allowed better prices to get to the farmers. Point being, if you've got reliable production, it's easier to make things more reliable and to set up businesses down the value chain where food processing actually comes into play.
Right, so as it stands, we're currently importing into the region from a demand perspective for the region, for the population?
So if we look at demand, I think we can use Nigeria as a simple enough example. The country consumes in the region of about 6 million tons of rice on an annual basis, and more than 3 million tons of that is actually imported. They're actually in some years, they rank as the second largest importer of wheat in the globe, actually. And they only produce 70,000 tons odd.
So are we moving to, so we know, this was the theme around things like cement as an example, right? And there were definitive steps taken to make sure that that the cement production in Nigeria, as an example, is such that they no longer have to import. Are we moving to that extent with things like wheat?
So I think the first step, which they are getting good strides in, is the fact that they're securing local production and increasing local output of those raw commodities that they actually need. The next step means that now that there's abundant supply, it's easier for food processors in those areas to actually source that and value add it to the next level. So you'll see companies like flour mills, companies like Dangote sugar and Dangote flour.
Dangote everything.
They do quite a lot in that part of the continent. You will see that they are managing to participate more wider in that value chain, and they're actually managing to process higher volumes of the products that they actually look to put through. And I think that's the first stage. The next stage, which I think we always talk about, is something that's very important, is obviously the reliability of electricity supply. Right. Because for you to set up a factory that gives you the right economies of scale and the right quality of product, one of the key ingredients is going to be reliable electricity supply.
So infrastructure is really a key constraint in terms of the potential. Are we doing anything about that?
I think there's been various initiatives being put in place by the various governments. Yeah. Again, sticking with Nigeria, you've got a lot of investment into power infrastructure that has been going in the last couple of years. Going forwards, I think they're looking at about $9 billion worth of infrastructure going in for electricity supply, right, to improve the grid, but also to improve power generation. So all these things do come together and I think start to make the outlook, the medium to long-term outlook for food producers or agro-processors quite bright when you consider those metrics.
In terms of some of the interesting legislations that they're putting in place, what are governments doing to make sure that they're protecting production in Africa?
Local producers in some West African countries have successfully lobbied their governments to apply tariffs on the imports of finished product.
Right.
So that sort of allows them room to not compete with product that is coming from elsewhere across the world, where prices are actually way lower than what they can manage in their local environment. So that means raw materials can come into the country, but the finished good or the process of turning it into a finished good has to take place locally, and that value add is where they can actually participate in the value chain. And I think this has had some very good results in some of the countries, and over time I think it allows them to build some very steady, sturdy businesses that can actually go on with food processing, not in specific commodities, but a wide range of them.
Right. If we move on the discussion to broader manufacturing, manufacturing is very broad, but it seems as if this is an area that's gaining quite a bit of traction, specifically in Nigeria. We touched a little bit on things like cement, and you could argue that's part of that. Your thoughts on where we are from a manufacturing basis in the region, in West Africa?
So the need for manufactured product is not even a question. If you come down south, staying on the west of the continent, places like Angola, they've got these brilliant forests that they actually have in the country, but they still import toothpicks simply because the manufacturing capacity for those kinds of products doesn't really exist at any meaningful scale.
Right.
So the opportunity is something that we really can't question. It's really about getting the right policies in place that can attract and retain capital, and also that allow for entrepreneurs to actually come into that space and try and exploit some of those opportunities.
Same sort of restrictions as with agro-processing infrastructure, is that a key challenge here again?
Generally speaking, yes. The World Bank continuously tells us that infrastructure is lacking in quite a number of the African countries. But I think more to the point, a lot of people are still finding innovative ways for them to carry out the activities that they need to, in spite of the deficiencies that exist at those points. Still, it's about being able to attract capital at the right price. It's being able to access those markets at the right price and being able to just conduct business. You know, whether you're running off generators or you're running off electricity from the grid, of course one is better than the other, but you need to have a view to where the profit is going to come from. That way they can access credit or equity funding, which will allow those businesses to tick over.
And in terms of legislation, which are the countries? I mean, if we go east, you know, Rwanda is the standout case from a regulation perspective. West Africa, anybody doing the right things, encouraging investments into manufacturing?
You'll find in places like Ghana and even in Ivory Coast, you're finding that they're encouraging more participation of cooperatives in the production of things like cocoa and palm oil, things that actually have significant international demand. But what they're also doing is they're expediting the exports or the export process of those products to try and make sure that the cash flow cycle of those businesses actually works out quite well. So it's those small little changes taking place at the edge, but you know, the tide is rising in that respect, and it's moving in the right direction. So over time, I think we'll actually see the positive impact of all of those changes.
Across the region?
I would argue so, yes.
Okay. And Nigeria in particular is, you know, the largest market. Manufacturing there gaining good tailwinds?
The Minister of Finance, you know, consistently comes out talking about how they're not just focusing on the oil sector,
yes.
they're focusing on many other things in the local environment, from mining to mineral processing to even the film industry. You know,
right.
all of these things have an aspect of manufacturing
and we actually forget how oil is actually not. It's big in Nigeria's life, but it's not the only thing in their lives.
Exactly, and I think over the last three to 4 years, it's actually been growing far slower than non-oil GDP in the country, largely on the back of manufacturing. Property development has also been particularly big, and that speaks to the infrastructure requirement, which will set a firm base for manufacturing businesses to go forward.
And is this a function of things that government's doing right, or just the natural evolution of things as the economy grows and becomes more sophisticated?
I think it's a confluence of private sector really trying to go after those opportunities and government enabling them wherever possible.
Which is exactly what you want, right?
Yes, exactly.
Now, you know, are you as bullish in terms of the prospects for manufacturing in the region as you would for agro-processing?
I think simply because a lot more things have to fall in place for manufacturing. I'm probably more bullish or more excited about agro-processing.
Okay.
The need continues. People will need to eat no matter what, but people can defer their consumption of manufactured goods. So at least I like that defensive sort of quality around agro-processing, and it's really about getting the economies of scale and also sourcing raw materials at reasonable prices. Right. Anyone who can manage to do that, as far as listed companies are concerned, is someone that I'd find particularly attractive.
Let's leave it there. Thanks, Fungai. Thanks to my guest, Fungai Tarirah from Rudiarius Capital Management. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.